Fed Chair Jay Powell will testify today on Capitol Hill before the House subcommittee on the coronavirus crisis. In prepared remarks, Powell said that, in his words, the economy has shown sustained improvement and that temporary inflation pressures should ease as the economy continues to recover. He also said, once again, in his words, job gains should pick up in coming months as vaccinations rise, easing of some pandemic-related factors currently weighing them down. Let's get right to the markets. Joining us now is Gabriela Santos, global strategist at J.P. Morgan Asset Management, and Gunjan Banerjee, markets reporter at the Wall Street Journal's Money and Investing team. And I think, ladies, that some of your comments in the pre-interview sort of informed some of my remarks earlier. I'll start with you, Gabriela. It's like, what's not to like? It's just, you got low interest rates, a very strong rebound potentially coming. Isn't this a time that financial assets should do well just based on underlying fundamentals?
Absolutely, Joe. It's a very constructive backdrop. You have above trend growth. You have an extremely patient Fed, willing to tolerate a modest overshoot in inflation. None of that changed last week at the Fed meeting. So still a very constructive backdrop for risk assets, things like equities, credit, cyclical sectors and regions. I think ultimately what happened last week, in Bullard's words yesterday, was a bit confusing. If anything, there was some unwinding on some positions of a tail risk of an extreme overshoot in inflation. And definitely technicals had a role to play, especially in the long end of the curve. But overall, for us, the constructive backdrop has not changed post-Fed meeting. And it was nice to see the market react in a more rational manner yesterday.
Gunjan, I think I might have even said it a couple of times, and it worries me, but that it might be different this time. I think I was talking about the deflationary and disinflationary benefits of technology that maybe we're overlooking, that are long-term, that allow us to have these, low interest rates with very strong growth. It's bad to say it's different this time, I think, isn't it? But is it?
So, for years almost, people who called for the value trade comeback were like the boy who cried wolf. And now we've had this tremendous period of outperformance for value. Earlier this year, value stocks were outperforming growth by the largest margin in 2 decades. And now people are wondering, how long is this going to last? And I think it's too soon to say that, hey, the value trade is done for now just because of what we saw last week. Take a look at yesterday, where the Russell and energy stocks and financials had this tremendous rebound. So I think we'll keep seeing this back and forth.
The NASDAQ is still on everyone's mind as maybe the place to go if you really want outsized returns. Does that make the value play less attractive, Gunjan?
So there's a divergence even among growth stocks. Sure, last week people turned to the NASDAQ and some tech stocks, but take a look at some of those trendier growth names like Tesla. Those are still down a ton. Cannabis stocks, electric car companies. So there's a divergence even among growth stocks that I think makes it tough to generalize here.
Do you, Gabriela, get any, does it cause you any concern when you see some of the speculative asset classes, and some are looks like some air might be coming out of some of them? We had someone say that a lot of the NFTs are not going to be long-term. They're not going to continue to appreciate long-term. You don't necessarily throw crypto into that, but certainly meme stocks. There are pockets of pure speculation. Does that make you worry about the overall market or not?
So it makes us concerned about specific areas of the market when you have price movements that are very separate from actual fundamentals. So it's always, in our mind, healthy to see when you have profit taking in those areas. You've named a few, whether it's meme stocks or extremely small cap stocks. For a while, you were also seeing that in the largest FANG names as well. You could throw cryptocurrencies in that, certain forms of SPACs. So there are certain areas where you have speculative activity, and it's always healthy to see a little bit of profit taking in those areas. What's been interesting to see most recently compared to January is that that's not bleeding over into the broader market. So it's something that causes volatility in only very specific areas of the market. For us, we're still fundamental investors, and that's where we stick to our knitting.
Shepard Smith here. Thanks for watching CNBC on YouTube.